Welcome to World Buzz Bulletin. In a move that underscores its commitment to institutional independence, the Federal Reserve has voted to hold interest rates steady, defying direct and mounting pressure from the White House to implement a cut. Following its first policy meeting of 2026, the central bank announced that it would maintain the federal funds rate at its current level, citing the need for further evidence that inflation is truly on a sustainable path toward its target. The decision comes despite public calls from the administration for lower borrowing costs to bolster economic growth ahead of the upcoming election season, setting the stage for a significant political and economic showdown between the executive branch and the nation's highest financial authority. Federal Reserve Chair Jerome Powell, in a highly anticipated press conference, emphasized that the committee's decisions are guided solely by economic data rather than political considerations. While acknowledging the administration's concerns regarding the cost of living and industrial investment, Powell maintained that premature rate cuts could risk reigniting inflationary pressures that have only recently begun to stabilize. The White House, meanwhile, has expressed its disappointment, arguing that the restrictive interest rate environment is placing an unnecessary burden on American families and small businesses during a critical phase of the economic recovery. The key takeaways from the Fed's decision and the ensuing fallout include the steady hand policy. The Fed's decision to hold rates suggests a cautious approach, prioritizing the long-term health of the dollar over short-term political gains. The independence debate. The public disagreement has reignited a national conversation about the limits of presidential influence over the central bank and the importance of an autonomous monetary policy. Market reactions. Wall Street saw a mixed response to the news, with investors recalibrating their expectations for when a rate cut might finally occur, leading to fluctuations in both the bond and stock markets. Economic projections. The Fed updated its outlook for the remainder of 2026, signaling that while cuts are still on the table, they will only be triggered by a significant cooling in the labor market or a more rapid decline in core inflation. As the political friction intensifies, all eyes will be on the next round of economic data to see if the Fed's cautious stance is vindicated. The standoff highlights the delicate balancing act required to manage a modern economy while navigating the pressures of a high-stakes political environment. We will continue to monitor the administration's response and any further signals from the Federal Reserve as the year progresses. Thank you for watching World Buzz Bulletin.